Good evening, everyone. This is Rodney with the Triton Wave Market Outlook from Monday, April 1st, 2013. April Fool's Day. All right, well, I hope you had a wonderful holiday weekend, and it was a shortened week last week, so there should be some exciting stuff coming up. It was also the end of quarter window dressing, and the market managed to finish at 1562.75 on the S&Ps. Right now they were a point above it and 3 points below it. So as uh, as as of this presentation at 8:45 Central Time, we're down 175, which is not a big deal. But I did want you to notice that it's basically the same old story. This is going along nicely, and then a little dip there, and then continues on its path. In the meantime, the T1, which is a trading wave on the daily, moves down. When this when when this moves when this area moves down, this moves down further, and then when this goes up, this goes sideways, and now it's down again. So we're only 1 or 2 days from T1 crossing zero. If we look over on the on the right-hand chart, we see. Let me see here on the 21-minute chart. T1 is going below zero here, and this, as you know, the Triton waves are an early warning sign. So if you're following this, you get to capture that move, which I can't tell what the arrow's there, but 1554 down to the 233 is 1540, so that's not a bad move. But right now, it looks like it just, again, the prices right now on the 21 minute chart, because they're not Globex prices. We'll look at the tick chart in a minute. But this above zero, T1, T2, T3, T4 is above zero, and T5 is mostly above zero. So that looks like it may want to continue up just a little bit. I do believe this is running out of steam. It's on less and less volume, and as we were looking at the charts in gold before, the steam, there's almost no trading in this. So actually, let's look at a tick chart and see what, let's look at a 1597 tick chart. I'm going to shut this off for a minute, and I'm going to pause this for a minute and then load up the days. Whoops, sorry, I thought it was on pause. Well, I actually thought that the volume had slowed down on the tick chart on the 1597 on the ES, but it doesn't look that it like it has. But you can see, like, on this is Thursday's trading in here. This is Thursday's trading. This is Wednesday's trading, and you can see that it was hard to see these moves here when it crossed below zero here. It made a little dent, and when it crossed above, it went above. There wasn't really a lot of activity, not a big range. There was more of a range like the day before when it went above zero here. We could actually go to a smaller chart, a smaller time frame chart, and see what that looks like. The smaller time frame chart is not working out. Let's go to a 987. Okay, 987 looks good. So let's look at that. All right, so on Thursday's trade, we have a move that's right at the top of this peak here, and I'm just talking about day trading here. And small move, but then you catch this one on the upside all the way up to here. So it works in your favor if you're only trading. The rule of thumb is that you use the longer term waves, which are the ones down here, the T5 as an anchor, or you can go over here and use the 21 minute chart as an anchor, and all these are above zero, T1, T2, T3, T4. So you would only play these to the upside. You wouldn't try to. So you would only play them up here, and you would play it up here, and you would take your profits. You would take your profits here. So basically, you wouldn't be playing this, and you wouldn't be playing this. You may make 2 or 3 points. If you want to really scale it down and see, like split hairs, you can go to the 144 chart on the S&Ps and just go in for like 1 or 2 points at a time. So on T3, let me see here. So on T3, you're moving down here, and you're moving down from 1564 right in here, and you're staying in for 2 points and then just getting out. Because the 144 can whipsaw on you. And that's the only way I would play the downside, if you were playing it very, very close to the chest, and you're making 2 or 3 points on the upside here, and then again a little bit to the downside. So right now, this is the 144. This is a live chart, so you can see what it's done since the opening of trade at 5 p.m. Let me see. This is 8, 3, 4. Let's go back to 5. Okay, so here's the opening of trade on Sunday, March 31st, and it went up. It went up a little bit, but the wave stayed below zero. So this would be like a good entry point right here. Right here, and when this is completely below zero here, or when it's below zero here. You can kind of anticipate it by what's going on right here and get in a little bit early. But as soon as the 8 and the 21 cross, it verifies what the T1 is doing, and then you can ride some of this down. But if you're using the 144, you're only in it for 2 points. So don't be a hero and try to get a major move off of a 144 tick chart. All right, I still think that it looks to me like this is topping out. The positions that I am taking are all on the downside, and let's look at one of my favorite stocks right here. Okay, let's look at a tick chart on the. Oh, actually, they're both. What am I doing here? I wanted a tick chart. I wanted a 987 tick chart of Apple, and I wanted the 21 on the left. So you can see that the 21 on the left is, hang on right there for a second. Okay, T1, 2, 3, 4, and now 5 is completely, whoops, that is completely below zero. That is on the 21-minute chart of Apple. It just trades during the daytime. All right, so when did this start going down? It started going down, let me get an arrow in here. If you're just following the 21, clean break right here in association with about a 463 trade, 463 on Apple, and that happened on four trading days. That was on Tuesday, let me see, Thursday, Wednesday, Tuesday. That happened on Tuesday, and it was a breakdown to 444. So that's a 20-point move on T1 of the Triton wave. So if you're looking at T2, it's right here for confirmation, T3 confirmation, T4 confirmation, T5 confirmation. First time T5 has been completely below zero since the beginning of March, when this was at 430. So this is what I'm looking for. Expect 430 right here. Now, it's going to be a little bit different. You may have a little bit of kick up, so your timing has to be really good on this, because it may kick back up about 7 or 8 points up to this 377 and 233 exponential moving average, because it looks like if you're just following the 987 here, whoops, if you're following the 987 tick chart, then you have a sideways move even though T1 is above zero. And the reason being, the reason it's sideways on the stock is because at this same moment in time, T1 is below zero. T2, T3, T4, and there's no way that this is going to get a movement to the upside. So you can either stay in it or just try to shave a few points here and there. This would be ideal on the 987 tick chart on Apple to take that down right at this price, which is about 449, and then you ride it down until this crosses again. Oops, which is right about 442, and that all happened. That all happened on Thursday. So nice day trading stuff. Let's take a look at Goldman Sachs and see what that's doing. Okay, actually, whoops, I wanted to go back to Apple for a minute. I wanted to show you the daily on Apple. Okay, now the daily on Apple. Now, it's kind of a quirky story here, because Apple is firmly below zero on T5 on the daily and T4. T3 is looking a little bit up. T2 has actually gone above zero, and T1 is completely above zero. So since T1 has been above zero, we had one pop up for about 11 points, and now we're going sideways. And not only that, the 21, the 8 crossed the 21, and now it's crossing below the 21. So this is what you have to look at. You have to break down the daily, and if the daily perks up in this area, hang on one second. If the daily looks like it's perking up here on T1 and T2, yet you look over at the 21-minute chart on Apple, and it looks definitively like it wants to go down on the 21-minute. Guess which one you're going to use? You're not going to pay it. You're not going to be paying attention to the upside on the on T1 on the daily, because it's already well established below zero. So you can use the daily as an anchor and take advantage of this move from 463 3 days later to 442, and that's how that works. Okay, let's look at one more, and then we'll call it an evening. Okay, I do like Goldman Sachs here, the 8 and the 21 on the daily, crossed below zero, but more importantly, that became a confirmation of what happened on the daily 3 days before. So a lot of people use the 8 and the 21 before they'll commit to anything. The Triton wave showed that they were moving below zero 4 days before the 8 and the 21 crossed. So just mark that in your calendar. Just remember that. So your entry on the wave was 152 and change. Your entry on the crossover was about was about 150, 149.75. Okay, so we got a confirmation here on T on T2 that's now going below zero. This is the first time since the stock was selling for 125. So let's look at the 21-minute chart. Now this whole chart goes back to about let me see. This chart all the way across from this corner all the way across is well, let me hear. Let me mark this off right up there. Okay, right here is the marker right there. That general area is the marker for this entire move across the screen. So this just breaks it down to smaller pieces. But you can see on the 21-minute, there's some nice breaks to the upside. Didn't really move that much, but if you're an option player, you got like three or four points out of it. But more importantly, because this is on a down slope and this is heading below zero right here, then you want to look at the slightly longer waves like T3 and T4, which got you into the trade right in here. And the rule of thumb is once these go below zero, you wait for a bounce, comes back up to this congestion here, and you're in at 150, 153, and you can ride this basically. If whatever wave you pick if you're picking T3 to get in, then you're out at T2, which is right here. You're only like a point off the low here. Okay, so what is it doing now? I like the trend. This has had opportunity to go up. And let me shrink this a little bit. This has had an opportunity to go up. It came down tremendously here. It went up for a couple days, slammed down, been going sideways to down, and then it tried one day up and it reversed on Thursday, and we're still below zero and getting below zero here. By tomorrow's opening, this will be completely below zero. So just keep that in mind when you're looking for a trade. So on the 21, you want to make sure that at least T1 is below zero right here. So this will happen in the first. These are 21-minute time frames, so this will happen within the first 2 or 3 candles of opening trade on Monday. And we already see that this is below zero on T5. T4 is below zero. So any move below zero here, or even in anticipation of that, you could probably get in and buy some puts. So let's look at the 144 tick chart on. Let's look at something a little bit bigger. Let's look at the 610 tick chart. That goes back too far. Let's stick with the 144. So the 144 is basically getting you in right here, this line right here on T4, and then a confirmation is T5. So you're in between 148 and 147. You can get in there. If you have any kind of a kick up to the upside above the about the 8 period moving average, which is 147.92, I would consider that a short on Goldman. Okay, one of the things I wanted to tell you, one of the reasons why I really don't like the market here is, and I think it's just kind of like a balloon effect to the upside. And we can take a look at the ES again. And let's bring this up to a 610 chart. So this is a live chart going on here. Actually, you can look at the live chart while I'm talking. This is a 144 tick chart. Um, economic growth came out for the fourth quarter at 0.4%. Now, it was larger than what the previous estimates were at 0.4%, but less than what is needed for employment. If you multiply that times 5, you get 2%. 2% just keeps employment where it is. It doesn't add anything to the labor force. As a result, the jobless claims rose 16,000 to 357,000. The problem is the government is spending $1 trillion more than what it is taking in annually. So the difference has to be made up in program cuts, which are usually, like some people are targeting defense, some people are targeting entitlement programs. And the entitlement programs right now, like Social Security, are entering a field. It's a kind of a curious thing because the baby boomers from 1946 to the present have spent the last 50 or 60 years building this economy. And the economy grew on the backs of all the baby boomers. But when you start taking entitlement, and they're all like between 65, between 55 and 65, they're getting ready for retirement, and their entitlement programs are going to disappear in order to make up for, they won't completely disappear, but it's going to create some hardship in order to make up for the $1 trillion increase in spending. Because if they don't, this economy is just going to implode. Instead of having an inflationary scenario, we're going to have a deflationary scenario. Alternatively, we can do a Cyprus-like blueprint of either closing the banks or converting personal savings into long-term bonds, or just taxing deposits. So none of these scenarios really sound very good, which is why I am totally surprised that the market can sustain its upward move like this. This is just, it's crazy to me. It's just crazy. I don't get it. And when everybody wakes up to the fact that we are actually contracting instead of expanding, and the only thing that's keeping us up is $95 billion a month injected into the economy. Once that is removed, it's not going to look very good. Japan's CPI was 0.3% in February, and that was Japan's CPI fell 0.3% in February. So there's, one of our trading partners. It really doesn't look that good. All right, so that's all I have for tonight. Have a great weekend. Enjoy the rest of your weekend. I hope you had a great holiday. It should be pretty exciting coming up on this week of trading. See you at the next update. I'm going to do a blurb on Triton Wave Consulting, so if you want to leave here, it'll only take me a minute, but take a look. Well, I can't get my PowerPoint to fire up right now, so what I will tell you is that I have a Triton Wave Consulting business, and you can get in touch with me. Oh, okay, there it is. If you want to follow me on, if you want to get in touch with me, I am at tritonwaveguy@gmail.com. If you want to follow me on LinkedIn or Twitter, I actually put both of these. I put these videos on both these places. Hang on 1 second. I do have a Triton Wave Consulting service, which is a concierge service tailored to individual needs. I will do videos for you or do consulting for you over the phone, any way you want to do it. Send you text, alerts when it's appropriate to get in and out of a trade with targets. I'll leave this up so you can read it. It's a blurb about my old waves and the book that I appeared in. These are the fees. I will leave them up here for you to read. You can pause it. And I will leave that up. And I also do gold and silver for private clients. And if you would like to be a private client, I will do a video for you for gold and silver. And I will give you entrance points and exit points. In the last 9 weeks, I have generated, the Triton waves have generated 175 points on gold. So there are a lot of private clients that are very happy. So again, get in touch with me, tritonwaveguy@gmail.com. Have a great evening, and I will see you at the next update.